This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices were little changed on Monday, a day after the widely expected extension of voluntary output cuts through the middle of the year by the OPEC Plus producer group. Brent futures were up 19 cents to $83.74 a barrel at 14:22 GMT after rising 2.4% last week. U.S. West Texas Intermediate, WTI, rose 6 cents to $80.03 a barrel following a 4.6% gain last week. The OPEC Plus are extending their voluntary oil output cuts of 2.2 million barrels per day, BPD, into the second quarter to cushion the market amid global economic concerns and rising output outside the group.
Russia on Sunday announced additional voluntary cuts in oil supply, mainly in the form of production cuts rather than exports, as it faced curtailed refining capacity as well as stricter sanctions, analysts said. Russia has declared plans to cut its oil output and exports by an additional 471,000 barrels per day, BPD, in April to June in coordination with some OPEC Plus participating countries. While the world's second-largest oil exporter has been reducing 500,000 barrels of oil per day in exports of crude oil and oil products in the first quarter, it has decided to scale down export limits in the second quarter and focus on production curbs instead.
Moving on to the top news in the energy sector.
The European Union is set to call for the fossil fuel industry to help pay for fighting climate change in poorer countries under a United Nations target, a draft document shows, as nations prepare for talks this year on a global finance goal. This year's UN climate negotiations in Baku, Azerbaijan, in November, are the deadline for countries to agree a new goal of how much wealthy, industrialized nations should pay poorer ones to adjust to the most severe impacts of a hotter world. Given the spiraling costs of deadly heat waves, droughts and rising sea levels, the new climate finance target is expected to be far larger than the existing UN commitment of rich countries to spend $100 billion per year from 2020, a target they failed to meet on time.
The United States may sell its 1 million barrel Northeast gasoline reserve in fiscal year 2024, according to the draft text of a funding bill released on Sunday. The reserve, first established in 2014 after Superstorm Sandy left motorists in the northeastern United States without fuel, is located in New York Harbor, New York, Boston, Massachusetts, and Portland, Maine. The proceeds from the sale of the refined products in the reserve would be deposited into the Treasury's General Fund, according to the text of the bill, which is likely to pass this week. Next, we have the top news in metal markets. European and U.S. buyers will compete aggressively for Middle Eastern aluminium if the European Union bans Russian metal in coming months, sparking price rises reminiscent of 2018 when sanctions were imposed on Rusal. A race for aluminium from Middle Eastern countries, including the United Arab Emirates and Bahrain, will fuel inflation for Western companies in the transport, packaging, and construction industries, already facing high raw material and payroll costs. Aluminium is a key ingredient for electric vehicles. Significantly lighter than steel, it is now the metal of choice in a wide range of parts for electric vehicles.
Copper prices rose to one-week highs on Monday ahead of a key political meeting in China which could pave the way for growth stimulus, but gains were capped by persistent fears of stalling demand in the top consumer. Benchmark copper prices on the London Metal Exchange traded up 0.2% at $8,525 a metric ton in official rings. Prices of the metal used in the power and construction industries earlier hit $8,569.50, the highest since February 23. China's parliament meets on Tuesday. A property crisis, deepening deflation, a stock market rout and mounting local government debt woes have pressured China's leaders, and all eyes are on plans to support economic activity.
We will now look at the top news in the agricultural sector.
Untimely rainfall and hailstorms have battered winter-sown crops, including wheat, rapeseed, and chickpeas in India's main producing areas, delaying harvesting, industry and government officials told Reuters. Adverse weather could limit growth in wheat production and complicate the government's efforts to build stocks. This year's wheat harvest is critical for India, the world's biggest producer of the grain after China. Hot and unseasonably warm weather cut India's wheat output in 2022 and 2023, leading to a sharp drawdown in state reserves. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.